Okay, so let's talk about AI. It's the biggest story on the market, right? But is all the hype getting a little ahead of the actual reality? We're going to dig into some recent analysis that asks that exact question. Let's jump in.
In this quote, man, this really hits the nail on the head. It's the core paradox we're going to unpack. You've got companies throwing billions and billions of dollars at AI infrastructure, while at the same time, they're laying off their own people, and the tech itself can't even get basic reasoning right. So, how on earth can both of those things be happening at once? It just doesn't add up, right?
All right, so to make sense of this, here's how we're going to break it down. We'll look at that crazy money paradox, then the hype machine behind it all. After that, we'll see what happens when reality starts to creep in, how the market reacted, and then we'll even look back at some history to see if this feels familiar. Finally, we'll wrap up with the big questions we're all left with.
Okay, first up, the $200 billion paradox. This is where things get really weird. Massive investments smashing right into mass layoffs.
So let's start with the money. We're talking about $200 billion. And that's just the capital spending in 1 year from only the top 7 tech giants. This isn't money for ads or software licenses, This is for the heavy metal, the GPUs, the servers, the massive data centers. Literally the physical foundation for this whole AI revolution.
But while all that cash is being spent, this is also happening. Over 22,000 tech workers laid off just this year. And these aren't random jobs either. The cuts are happening in the exact same areas that are supposed to be exploding, like AI startups. It's a strange picture.
So this forces us to ask a really uncomfortable question, right? If AI is this incredible, world-changing revolution, then why are the very people building it getting laid off? It just doesn't compute. It feels like there's a huge gap between building all this amazing hardware and actually figuring out how to make it work or make money.
Okay, so to really get why there's this disconnect, we have to look at the story, the narrative that got everyone so excited and willing to spend all this money. So let's dive into the anatomy of the AI hype.
And yeah, if you want a perfect picture of the hype, look no further than this number, $3.5 trillion. That was NVIDIA's peak market cap. They make the chips, the shovels in this gold rush. For a hot minute, they were the most valuable company in the world. And it was all built on the promise of AI.
And this was the story they were selling, the next industrial revolution. You heard it everywhere, from everyone. The idea was that this isn't just a new gadget or app. No, this is a total game changer, a fundamental rewiring of our entire world. A story that big, well, it can convince people to part with a lot of money, but it also sets the bar incredibly high.
But here's the thing about stories and hype. Eventually, reality comes knocking. And that's our next section, when reality bites back. Let's look at the data that started to make people a little nervous.
So, one of the most important concepts you got to understand is this thing called an AI hallucination. Now, this isn't just the AI getting a math problem wrong. No, this is way weirder. It's when the AI literally just makes stuff up. It invents facts, it fabricates sources, and it delivers this nonsense to you with all the confidence of a seasoned expert. It's presenting fiction as fact.
So, you might be wondering, how often does this actually happen? Is it a rare glitch? Well, not exactly. The data shows that in production, in the real world, these models are hallucinating somewhere between 15 and 30% of the time. Just let that sink in. Almost a third of what it tells you could be completely confidently wrong. That's not a tiny bug. That is a massive fundamental issue with its reliability. And look, the issues weren't just on the tech side. The business side of things started looking shaky too. For one, companies were burying their AI revenues inside other product lines, so you couldn't actually tell if any of this was making money. In fact, for a lot of these big firms, their overall profit margins were actually shrinking, even with all this supposed AI efficiency. And that big payday, that promise of profitability, it kept getting delayed, pushed back 3, 4, even 5 years. Okay, so you've got unreliable tech and fuzzy math bubbling just beneath the surface. Sooner or later, the market's going to notice, right? And that's exactly what happened. Which brings us to the December correction. And check out how fast everything went south. It all kicked off on December 11th. A big research report drops, laying out all these AI problems for everyone to see. And the market's reaction? It was instant. It was violent.
the NASDAQ had its worst 2-week stretch in 5 years. They started calling it Wall Street's worst week. The party, it seemed, was over.
And this chart really shows you the damage. I mean, the whole NASDAQ index dropped 12%, which is a big deal. But the real story is where the pain was concentrated. The more speculative AI stocks, the ones built on nothing but a good story and a prayer, they got crushed. We're talking drops of 30, 40, even 50%, just wiped out.
You know, if you've been watching the markets for any length of time, this whole cycle, the insane hype, the crazy valuations, and then the painful crash, it might be ringing a few bells. So let's take a look back and see if history is repeating itself. And when you put the dot-com bubble side by side with today's AI boom, whoa, the parallels are pretty shocking. Back in 2000, it was all about pouring billions into fiber optic cables. Today, it's GPUs and data centers. Back then, you had companies with zero revenue getting billion-dollar valuations. Today, you have startups with no real plan to ever make a profit, raising hundreds of millions. See the pattern? In both cases, the investment wasn't based on real, provable value. It was based on a really, really good story about the future.
So after all that, we're left with some pretty tough questions about what's really driving the AI market, which leads us perfectly into our last section here. Is it real value, or is it just a great story?
Think about it from a practical standpoint. If a technology hallucinates, if it's just plain wrong up to 30% of the time, are you ready to let it make critical decisions in medicine, or in a legal case, or with your finances? I mean, in those fields, one wrong answer can be an absolute disaster.
And then you have the money question. What happens to a 3.5 times trillion-dollar valuation when the companies pouring all that cash into AI suddenly realize their return on that investment is, well, negative? That they're losing money? Where does all that value, all that market cap, just evaporate to?
So look, let's be clear. The point here isn't to say that AI isn't real or that it's not an amazing technology. It absolutely is. The real question is this: how much of its current, massive market value is built on something it can actually deliver right now versus how much is built on a really compelling story about the future? Because as we've seen time and time again, that gap between the story and the reality, that can be a really dangerous and expensive place to be.